Today, folks, it is no surprise that the Canadian markets are excelling against the US markets, and my Canadian dividend stocks are now pushing all-time highs thanks to the earnings that they just posted. And in this video, we're going to be discussing those earnings specifically coming out of the financial sector, my banks, along with one utility called Northland Power that pays a monthly dividend. It's a natural energy company. If this is a conversation you appreciate, especially if you live on the Canadian side of the border, just do this channel a favor, folks. Hit that like button, because just taking a look here, it is no surprise with the S&P 500, guys, currently trading down, 8%, even after the rally on Friday. That the TSX is almost green on the year. It is down just barely 1%. And I know you, like me, still have exposure to the US, and every time you log into your watch list, the volatility is maddening. But every time I scroll down to these Canadian stocks, whether we're talking banks, whether we're talking REITs, telecom, that utility sector, most of these are now green on the year, if not individually pushing all-time highs. And let's talk about this. First and foremost, Canadian Imperial Bank, one of my favorite banks, just pushed past its all-time high history that it experienced in 2008. And it's important to recognize over the US counterparted financial stocks, these guys in every single crash, the 08, the March 2020 crash, they've never cut their dividends and actually have increased them coming out of those crashes. So taking a look year to date, Canadian Imperial Bank is now trading up 9.23%. Still a reasonable PE and almost a 4% starting yield, guys. Just reading into one of these little articles real quick, they're saying that CIBC, the lender, joined Royal Bank, which also posted earnings, the Royal Bank of Canada, in positive earnings surprises in the quarter, in which analysts had expected some challenges, particularly some higher expenses and lower contribution from trading businesses. But actually just taking a look at the earnings themselves here, guys, absolutely insane year-over-year growth from Q1 of 2021, where they were sitting at 1.6 billion in sales, now at 1.8 billion, which is just astronomical. And look at the net income from 1.64 billion to 1.894 billion. Like, these increases are nothing shy of growth stocks. They are now growing faster than Facebook is. And if you just take a look at the year over year, we're talking about 15% growth rates. What are we talking about? Facebook's only expected to grow 8% this year. If this can keep this up, these banks are now officially growth stocks, which is only going to bode well for those dividend increases, which they've done every single year. Now let's talk about Royal Bank. Now keep in mind the dividends, they did not increase in March, like the 2020 crisis, but right after we came out of it, they did increase them. Now Royal Bank just posted as well, not performing nearly as well. It's up about 2.83% on the year. This one's always trekked slightly up into the right on the long history of the chart, with a 3.41% starting yield and a bit of a higher valuation. We're not seeing the same growth as some of the smaller capped ones, but just take a look, because 4.1 billion, up 6% year over year. Diluted EPS is up 7% to 284 share. And just taking a look at the revenue on year over year, just take a look, guys, at 13.06 billion total revenue against this time last year when it was only 12.37. Now we're not getting the same kind of growth rates out of this guy. Again, 6% is by no means anything to complain about, but that's why it's not bumping up as high as Canadian Imperial Bank. Now, the rest of the banks still need to post. They haven't posted earnings yet. They're going to be coming out next week, and they're already bouncing up based on how good these other reports have been. So we have Bank of Nova Scotia here, guys, paying a much better yield, a little lower valuation, and on the max chart, this thing I still think, they're pushing back toward all-time highs. It's nice to see this thing just trekking up into the right consistently. TD is another one of my favorites that I hold, guys. This one trades at a much higher value, being largely exposed to the US market. But look at these up into the right charts. These things are now growth companies, dividend payers. What more could you ask for with the history of these companies and the fact that Canada is one of the fastest growing populations of the G7 countries, right? Absolutely beautiful stuff, and only more to look forward to. BMO, by far one of the best performers here, guys, also needs to wait to post earnings. I did not buy this. A lot of people said, why don't you like BMO, Kyle? And that's because in the March 2020 crash, this is largely exposed to the oil sector. And when oil went negative, they had a lot of impairment charges, because obviously a lot of those people were concerned they weren't going to pay their loans coming out of that oil sector. I didn't want exposure to it. I didn't buy it. Anybody that took on that risk did phenomenal from these bottoms. Take a look at this. Just in over a year and a half, 2 years here, guys, up 132%, let alone the dividend yield you would have gotten out of that. Now look at the Canadian National Bank, another one that I don't buy because it's a smaller cap. Some people said, well, why aren't you proponented to the smaller caps? Because as I mentioned, when you're buying large cap stocks, you get the benefit of ETF investors, because ETFs largely weight large caps toward the top and then they go down. So if you're investing in ETFs, you also get the benefit of ETF money trickling from the top down in the larger caps. So it offers a little bit more stability, right? But National Bank is up 3.15%, also a great 3.4% yield. In the history of this one, well, no surprise, up and to the right. Now let's talk about the utility. My favorite utility utility, which I recently added a little bit more money back to after selling out of it because I just wanted to get through the last earnings period, because for the last 3 quarters, this beautiful monthly paying dividend stock has done nothing but post terrible earnings, in my opinion. I was getting very hesitant. They were pushing above their payout level, so I was worried the dividend might be at risk. But coming into this quarter, guys, blew it out of the water, pushing them green year to date. Now, the PE is astronomical here, guys. The renewable sector with utilities, the valuations get a little bit nutty, but let's just take a look here, because based off the sales, because of basically some of their exposure to the Spanish portfolio they have, and they also have been expanding into natural gas facilities, their sales increased 30%, their gross profit increased by 33%, adjusted EBITDA up 35%, and free cash flow up 146%. Needless to say here, guys, they're going to have no problems paying their dividend, and this has reassured my confidence in the global exposure that this company offers. Just take a look at sales here, guys, from 492 million here, because we're in the thousands in 2020, to $640 million. The problem is year end. We can see that the growth has stagnated slightly here, guys. So, I mean, it looks like we flattened a bit, but I'm confident that as they start working out these other systems, as we see the quarterly bump, this should excel them into 2022, bringing us back into a wonderful free cash flow, which I remind you, this free cash flow and the adjusted free cash flow needs to be above the total dividends declared, which if we take a look on the yearly, from $1.77 in adjusted free cash flow and $1.20 paid out, lots of room, reassuring my confidence that we should be okay here when it comes to the dividend. On that note, folks, I am absolutely ecstatic that, having global diversification in my portfolio and this large exposure, the Canadian market that was usually looked at as weak against the US economy is now proving what I thought would happen, which is stability, incredible amounts of capital coming into the country, and very few places to put that capital, because we did see TELUS earnings as well. TELUS crushed it, also pushing all-time highs. And I think we're going to continue to see this because, again, guys, there's only a handful of large caps in each sector that are getting exposure to this economy boom. And I want to know what you think. So I pass that question off to you. Let me know in the comment section below. But stay cool, stay awesome, and as always, I look forward to catching you in the next one.